Most service members are getting screwed on their VA loan and they don't even realize it. And today we're going to talk about both how to build wealth and how to actually use it so that you can spot when a lender does not know what they're talking about. First off, I know you've heard about the VA loan and it's a zero down benefit, but how does it actually work? And that works because the VA guarantees 25% of the mortgage whenever a lender gives you a loan. So let's use a $100,000 house for easy round math just to make this simple. If you are buying that house, let's say you use an FHA loan and you put 3.5% down, the bank will give you 96.5% and you put $3,500 down. However, the VA steps in and says, we will guarantee 25% of the mortgage. So the bank gives you $100,000 on the property and you come out of pocket $0 on the down payment. In the unfortunate event that you default, the VA steps in and covers that 25%, so the bank effectively gets treated as if they only lent you $75,000 out of $100, even though they get to earn interest on the full $100,000. So it's a win-win-win, right? Some of the key perks that this actually triggers is that obviously the $0 down payment, but no private mortgage insurance. You see, if you put less than 20% down on any other primary residence mortgage, a FHA or conventional, you personally have to fund private mortgage insurance, which still covers the bank in case you default for up to that 20%. Meaning, again, let's say FHA loan, they give you $96,500, you put $3,500 down. If you defaulted, the bank would get covered by that mortgage insurance all the way down to $80,000. So they would earn interest on $96,500, even though effectively their risk is on $80,000. I hope that kind of makes sense. The VA gives them a stronger guarantee and you don't have to pay for PMI, which is actually very expensive. And on top of that, because the VA is guaranteeing the loan, it is a secure loan for lenders, which means that you get lower interest rates. And I know there's stipulations out there and people tell you that the VA does not have lower interest rates, but historically, the VA loan interest rates do in fact crush all the other mortgage products more often than not. A really dumbed down way to think of this is that Uncle Sam is basically co-signing on your loan and vouching for you, saying, hey, he served the country, so we're going to make sure that he gets this loan. On that note, just to address a question I get all the time, no, you cannot use the VA loan outside of U.S. territories or the United States because the government is not going to guarantee a loan for you in another country. That's just not, the intent of this loan is to help you buy a house in the U.S. Okay, now before we get into all the semantics of exactly how you use the VA loan, let me just tell you my favorite strategy with it, which is house hacking. This is how you actually build wealth with the VA loan. There are a lot of different methods to do this, but to keep it simple, the two most popular are you buy a duplex, a triplex, or a fourplex. You live in one unit, you rent the other units out so that your tenants help cover your mortgage and effectively eliminate or at least greatly reduce your cost of living there. And the second is to buy a single family house with 4, 5, 6 bedrooms where you can rent other bedrooms out. This is especially great with single lieutenants who rent to their lieutenant friends, and then they get to live for a low cost of living and you have them help pay off your mortgage. And then when you PCS, you can do this again because yes, you can use the VA loan more than once. Now, I'm not going to necessarily dive way in the weeds on how entitlement works and all of that, but I've got videos on that really deep dive the difference between the one-time restoration of benefits and the restoration of benefits and how to utilize this to really leverage your VA loan. But just to sum this up, I've got a friend who had 4 duplexes out on the VA loan at the same time. Now, he didn't buy them at the same time, but over time he collected them on VA loans because the total purchase price was less than his entitlement. He was able to do so. And the really cool thing here is that this is the fastest way to just change the trajectory of your journey to financial freedom because you're saving the money that you would have been paying on your largest expense, which is housing. By and large, as an American people, the average amount of our income that goes to housing is 33%. Right? So imagine if you could take 33% of your paycheck and then save it to actually invest it. That money will compound very quickly to allow you to achieve financial freedom. And I've got a whole video coming out on exactly how that math works and how quickly it can change your life. Newsflash, it can save 30 years off of your time to achieve financial freedom. And I'll show you all the math in that other video coming out. On top of saving all that money, the property is still going up in value. Appreciation long-term is about 4% national average. And you're still getting your mortgage paid down, but instead of you having to make those payments, your tenants are paying you and then you're using that money to make those payments. So it's a win-win. And again, just to reiterate this, the VA loan is reusable. So you can in fact do this multiple times and have several different properties that pay you to own them. A few different mistakes that can really bite you with using the VA loan. The very first one, and I see this a lot, is buying a single family house at the very top of your price range in a market where you have no way of recouping any of those costs. So let's say you want to live in your dream house and you're like, I got approved for $650,000. So you just immediately start looking for $650,000 houses. Now, just because you got approved for $650,000 does not mean you have to spend it. You could go buy a $500,000 house, and then you have some wiggle room in your budget, which would be a good move. But a lot of times people want like the max amount that they're able to borrow. They get shiny object for like their dream home. They care more about their school system and the house than they do about the income potential of like renting bedrooms or a duplex or, whatever, which means that you're forking out, instead of saving 33% that you would have been spending on housing, you're spending every dollar of that 33% on housing. And that really stretches your budget. When you buy a house with a VA loan, which a lot of people say, oh, you should buy a house at every duty station. I think you should buy an investment at every duty station. And I know you can't buy an investment property like a rental property with the VA loan, but you can buy a house already thinking about what it will look like as an investment, meaning you buy a house that when you rent it will at least pay for itself when you move to the next duty station. Unfortunately, when you buy a house at the top of your approval and then you just plan to live in it as a single family, a lot of times that one will actually cost you money to hold on to when you PCS. So buy the house planning on the rental side in order to really hedge yourself against that by being able to afford the property because your tenants are paying for it. Because if you leave the house and it's paying you $500 a month to own it, you're in a better situation. But if you move out of the house and you're having to pay $500 a month to hold it, that actually hurts you in the short term. And then just fact check what your lenders tell you, because if a lender tells you can only use the VA loan once, which I've had happen, or any other number of things that doesn't sound right, you should really bounce it off of the VA guidelines or another lender to really fact check, because unfortunately, not all lenders are created equal, and unless they've really done the homework on the VA guidelines and the VA loan, they don't actually know all the answers, and they might steer you in the wrong direction. I'm going to give you two very quick examples of how this could work, and then we're going to dig into like eligibility and all that. The very first is my good friend Rio Gallegos. He bought a house for $781,000. It is right outside the old main side gate of Camp Pendleton. When you come out old main side by the golf course, you come to that first stoplight, you hang a left in that gated community. He bought a house in there. It's a 5-bed, 4-bath. He was a single lieutenant at the time, captain. He rented out to other single lieutenants and captains. He rents to staff and O, but at the time it was all officers. And so he rented out 4 of the bedrooms. And while he lived in the house, he made a couple $100, like $300 to $500 a month while living there. But when he moved out of the house, he now makes $1,500 a month because he rented the room that he was in to all of these staff and officers. And he's stationed in Okinawa, Japan right now. So from Okinawa, Japan, he's making $1,500 a month net to own a house that, again, he paid $781 for. He owes less than $650 on, and it's currently worth $1.2 million. He's got $500,000 in equity in a property that pays him $1,500 a month to own it. That is a bombshell. That's how you do this. And then just another easy button example, and another war room member is my friend Alex Schlow. He bought a property for $415,000 in Colorado Springs, and it had a basement that wasn't really being used. So they dug an egress, like an access point, a door, and it cost him about $20,000 to do that. Now you can use home equity, or you can have money saved, or there's a lot of ways to do that, but they were able to put the money in to build a door. They shut the basement off from the top, and they Airbnb that little 1-bedroom, 1-bath studio. And so they have this little 1-bed, 1-bath that they Airbnb that brings in right around $2,500 a month, which is enough for them to live for free. Now, they're not cash flowing on it per se. They're like right at break even, but they're living in a house in Colorado Springs it's effectively a duplex now because they got that first unit downstairs permitted, and they're living in it for free. So they're saving the $2,500 that they would have been paying on their mortgage and pocketing all their BAH, right? And then it's also, they bought it for $415,000. It's gone up to around $500,000 in value, and they probably paid the mortgage down to $400,000. So they've got about $100,000 in equity in a house that they live in for free, and they just Airbnb the basement to people they don't know. These are just two quick examples. We've helped a ton of people do this. And so the house hack with the VA loan is an incredible way to get yourself started in real estate. And even if you don't use the VA loan, house hacking is amazing. I've done it 3 times, and one of those times, I didn't even own the house. I actually rented a 4-bedroom, 3-bath home And then I got the landlord to agree that I could sublet, meaning rent out bedrooms. And I rented one to a really close friend, and I Airbnb'd another one. And I used the master suite for myself and the other bedroom as the office, rented 2 bedrooms out. And I lived in that house. My mortgage was $3,000 a month, and I lived in it all in. I probably came out of pocket about $500 a month to live in that house, because the other $2,500 was covered by the tenant and the Airbnb. And I was saving about $2,750 a month from my BAH that I could then reinvest while living in a house in a beautiful new neighborhood. I mean, I was the first person to ever occupy this home. Eligibility requirements. This is the first thing you need to know. If you're active duty, you basically have to just hit that 90-day mark, and then you're eligible for using the VA loan. If you're in the reserves, you have to either do 90 days on Title 10 orders, which if you're a reservist, you'll know what that means, or you have to complete that full 6 good years on reserve duty in order to be eligible to use this benefit. Surviving spouses also may qualify for the loan, but for that's a little bit outside the scope of this video. I'll link to some resources for the VA guidelines that will help you sort through that if that applies to you, or you can just talk to one of the lenders that I recommend at the bottom. Or you can scan this little QR code and you can get recommended to an agent or lender that I've actually worked with in the past and knows how to use a VA loan, and they can answer all those questions for you. Okay, now before we overcomplicate this process, here's basically what it looks like as a nutshell. You have to get pre-approved by a lender, meaning you give them some basic financial stuff. The pre-approval does a soft pull, meaning it won't affect your credit score yet, and they'll tell you kind of ballpark what you can be qualified for. Then you need to go look for properties within that realm. Now, I will give you the trick here for duplexes, triplexes, and fourplexes. If you're trying to house hack, you will get pre-approved for, let's call it that $650,000. And let's say that the VA loan or that a fourplex in your area actually costs $800,000. You're like, well, shoot, I'm not qualified. Not necessarily. For any multifamily property, you need to do a separate pre-approval with your lender. So what you do is you go to your lender and you say, hey, I'm looking at this fourplex. It's $800K, but you said I was only qualified for $650. Please underwrite the rents on this property and see if I can in fact qualify for the loan. Meaning, if you take 75% of the rent coming in from the 3 units you're gonna not live in, then you can count that towards your income, which will help qualify for a more expensive home. For reference, I had a single sergeant friend of mine buy a $1.2 million fourplex in San Diego County when there's absolutely no way he would have been approved for that without counting the rent for those units. And then you're gonna once you find properties that make sense, you're gonna make an offer. And just fun fact, depending on how hot the market is, you don't have to offer full price. You can negotiate a little bit. You can say, hey, the house is listed for $420, I'm gonna offer $395. And you can kind of go back and forth. Again, just like your pre-approval is not exactly the amount you have to use, you can also offer less than what they're asking on the home and reap the benefits. At this point, once you're under contract and the offer's accepted, that's when you'll do the real hard pull credit approval. And you're gonna wanna go, your agent and lender will walk you through this whole process. But a couple of key things that you wanna know is do not get any debt that you didn't have prior. Meaning, don't go buy a car. That's a huge one. Don't go using your credit card a bunch. Any debt that you take on, the minimum payment for that, even furniture, right? Anything that will tweak your debt, your minimum debt obligations will mess with your approval. So talk to your lender before you do anything that involves debt that could change your minimum payment, whether that's credit cards, new car loan, furniture financing, any of that stuff. Don't do it till after you get your lenders to sign off on it, because you don't want to mess with your approval. I have unfortunately seen veterans buy a car the week before closing and then lose their mortgage because it changed their eligibility. And any good lender will walk you through all of this, and any good agent will walk you through all of this. So again, that QR code I mentioned earlier will help you introduce to an agent or lender who actually knows how to use this. They'll take you all the way through the process. You get your keys, you're a proud homeowner, and then the fun begins. Now, there's always people who bring up the catch, which is the funding fee. So for reference, when you buy this house, you're gonna have 2.15% of the total purchase price that is considered the funding fee and gets wrapped into the loan. Meaning if you buy a $100,000 house, your first use, you'll have to put $2,150 that will get wrapped into the mortgage, which for reference at 7% interest, that's $14.30 a month added to your mortgage. Whereas if you had to pay the private mortgage insurance I mentioned at the beginning, that would be $100 a month added to your mortgage. And again, to just make this more stand out, on $1 million house, we're talking about the difference between $143 a month for the funding fee or $1,000 a month for private mortgage insurance, neither of which affect your actual payment as far as paying your house down. they just disappear to insurance, right? The funding fee is what keeps the VA loan alive. That's how they pay their employees. That's how they justify the guarantee on the loan. And after your first use, it goes up a little bit, I think to like 3.6% right now. But here's the kicker on this. If you have a Purple Heart or you have a 10% disability rating or higher, funding fee is waived forever. So at that point, it's just completely not important at all. So just know, when you guys start thinking, like I have people comment all the time that are just like, they whine about the funding fee. It's less than the alternative, which is PMI, by a huge margin, like by like 80%, 85% less. And it's what keeps this program alive and allows the benefits to be out there. So I know it'd be amazing if you just had to pay nothing and got a house for free, but paying that little bit, really not the end of the world. And again, it keeps the program alive, which keeps the benefit open for all of us. Another note I should make here is that zero down does not necessarily mean zero money out of pocket. You should budget 1 to 3% for closing costs and fees, like your title insurance, your home inspection, termite inspection, all of that stuff. But you can actually get that covered by the seller. The seller can credit up to 4% of the purchase price of the home towards covering all that. And your agents and lenders can actually seller credit or can actually credit you at closing as well. So it's not uncommon that it will be $0 out of pocket, but it's always better to budget for the closing costs than and not need them than to not budget for the closing costs and actually need them. That said, and I'm not making any guarantees here, but there are agents and lenders in this network, the QR code I dropped, that consistently people who work with them actually get a check for a couple $100, maybe even $1,000, maybe even a little bit more at closing. So you are getting paid at the closing table to use your VA loan. Now that's not a guarantee, but it is possible. And a good agent and lender who actually cares about veterans can do that. Again, it's going to depend on market timing and everything. It's not their obligation, but there are service members and vets or agents and lenders who may have been service members and vets who want to take care of you and very well may credit that stuff in order to make that possible for you. Okay, so real quick overview, pros and cons for the VA loan, right? Some pros, just to reiterate: zero down, no PMI, low interest, all those good things because the VA backs it. Flexible qualifications. The VA actually has no minimum credit score, no minimum debt to income score. There's a whole lot of other stuff out there that the VA doesn't care about and your lender will. So for reference, your lender might say, hey, our minimum credit score is 620, but I've seen as low as a 520 approved. So you might just go to a bunch of different lenders and ask them. And your lender might say, hey, we say you can't have over a 55% debt to income ratio, but I've seen as high as a 78% debt to income ratio close on a property. Now, I'm not necessarily recommending that you take out the maximum amount of mortgage as humanly possible and stretch the limits there, but it's possible. And while the FHA and the conventional loan have a 49%, a 54% debt to income ratio cap, the VA loan, and those fluctuate, so I might be wrong right now, but like it's around 50%, the VA doesn't. And so the lenders have more flexibility if they know how to use it. There's other things as well that really make this loan more beneficial, especially from an interest rate perspective. Your interest rate actually adjusts fewer times as you go lower on credit score than it does with the conventional. And I'm not going to dig into all the specifications on that because it gets a little crazy, but long short, somebody with a 600 or 650 credit score with a VA loan will most likely have a higher interest rate than if they use a conventional or a FHA just based on their credit score alone. And then if you buy a multifamily with an FHA or conventional, they often add a 0.5% to your interest point because they assume multifamily is more risky. The VA does not add that 0.5% to 0.75%, and so again, your interest rate is cheaper. It's reusable, and there's even an incredible program called the VA IRRRL, which is the Interest Rate Reduction Refinance Loan. I have an entire video on that I'd encourage you to go watch. But basically, the IRRRL means if you buy right now and rates go up, you're locked in. And if you buy right now and rates drop, you can use this product to lower your mortgage payment. It just cuts your interest rate. It does nothing else. They call it the IRRRL, the Interest Rate Refinance or Interest Rate Reduction Refinance Loan, also known as the Streamline Refinance. But this product exists solely to help lower your mortgage payment, and you can only use it if it meets certain qualifications that actually lower your interest rate past a certain point and save you a certain amount of money. Now, again, I'm not digging all the way into the weeds on that, but go check out my video on the IRRRL and it will help you out because this product exists for nothing else in the entire world, only for VA loan. And one more note before I forget, the appraisal process with the VA loan, while people say it sucks, is actually better than any other product because you can fight the appraiser on it and actually win. When an appraisal comes in low with a conventional loan, You basically go back to that appraiser and you're like, hey, we kind of think you messed up. Did you count these things? And then they kind of get their ego involved and they probably like dig their heels in. And unless you're really nice or good at negotiating, you probably lose. In fact, I believe one of my main lenders said that they have less than a 15% approval rating on overturning an appraisal. Whereas with the VA loan, you have two chances. One, if an appraisal is going to come in a little bit low, they have to do what's called tidewater, which is a couple of days that you can submit new properties to try to change their appraisal before it's actually solidified. And two, if it still comes in low, you can appeal it, but when you do, it bypasses the appraiser and goes straight to the VA. So instead of them having their ego involved, the VA is checking their information and overturning it. And that same lender said he has close to a 65% approval rating on overturning appraisals working with VA clients. So 65% chance that you get your appraisal overturned versus 15 is huge. Now the cons, the VA funding fee. Everybody complains about this, but at the end of the day, it's still better than the alternative, and it's what keeps the program alive. It has to be your primary residence. So even with house hacking, you have to intend to occupy it as your primary residence. I'm not the guy who's going to try to teach you how to use the word intend loosely to find a way to commit mortgage fraud and hope you don't get caught. No house is worth mortgage or occupancy fraud. It's a $10,000 fine and a felony, and no house is worth not being able to vote, carry firearms, or see your kid at school. It's not. So don't play the game. Like, just enjoy the benefit for what it is. And if you're not going to live in the house, don't use the VA loan, use a different product. Ta-da! And then again, the seller, agent, and lender misconceptions, meaning people who don't necessarily know what they're doing, and rather than telling you that, they want to keep their commission, so they may just inadvertently steer you in the right way or regurgitate bad information. But if you're subscribed to this channel, then you won't get caught up in all that because you'll know the truth. I'm going to debunk some common myths real quick. The first is that the VA loan takes forever to close. It's clunky. People think that you can't close fast with the VA loan, and that's false. Now, while Veterans United, USAA, Navy Federal, Bank of America, like a lot of these big banks may not be able to close faster than 30 days. In fact, sometimes they take 40, 50, 60 days. That's not the VA loan, that's the bank. That's because the bank has clunky systems. It has a lot of people. It's a big organization. It passes you around. They have all these unnecessary fees, whatever. I'm not a huge big bank fan. I know personally several lenders who will guarantee you up to a 17-day close once they see your pre-approval. My buddy John, during the height of the chaos of mortgages in 2020, 2021, would tell people when they bought a house, you go under contract, he would put it in writing, I will close this loan 17 days. And if it is not closed on the 17th day because of something I messed up, I will pay you $250 a day in per diem until I close it. And not once did he ever have to pay that per diem. And so this product is capable of being a fast close with the right lender who knows what they're doing. I've got several of them across the country right now who can close very fast. So it can be competitive even in that way. You can only use the loan once. Okay, we've already debunked that a million times. No need to say that again. You can use it multiple times. You need perfect credit. Again, we debunked that already. You don't, though your lender will have their own stipulations, so varies. And honestly, like, for those who are going to comment about like complaining about their credit, just fix your credit. We're not here to hear it. Like, we know stuff happens. Sometimes it's your fault. Sometimes it's not. At the end of the day, the only one who can fix your credit is you. And if you have terrible credit, there's a reason. So like, I know it sucks, but at the end of the day, like, just fix it and then go get the loan. Okay, the VA loan is free money. That's something that people think all the time. No, I mean, yes and no. Like, you still have to qualify for the loan. You're still responsible for it. You still have to make the mortgage payments. Like, at the end of the day, it's not just like free money and you can get foreclosed on or go into default. But it's at a very low likelihood compared to a lot of other mortgages, and the VA loan actually makes it very easy to utilize this product successfully. The VA loan is an incredible tool for building wealth. It really is. We've helped hundreds and thousands of people work through this. We've done hundreds of millions of dollars worth of loans through connections we've made that have helped people leverage their VA loan to achieve and become financially free, or at least start that journey. Hell, even my COO bought a duplex, VA loan, 0 down, lived in it for free, moved out. It pays him like $2,000 a month to just own it. He doesn't live in it. He doesn't do anything with it. And now he has another house that house pays a significant chunk of the mortgage on. It's a great way to get started and build wealth. But again, you're going to want to make sure you're working with savvy lenders, savvy agents, people who actually know what they're doing. Okay, this was a deep dive overview, but it was still an overview. There's a lot more information out there. I'm going to link in the description to a 90-minute presentation that I gave that really deep dives all this stuff, as well as a link for if you want to talk to one of those agents or lenders, and a link to just download my book for free, which goes into even more depth and detail, and it's in writing, so you can like highlight it and whatever. And that is the book, The No BS Guide to Military Life, which is everything that I wish I'd known when I first joined the service. So I'll link to all that down in the description. And one last time, I'll link the QR code right here for, I guess, for both my book and the lender. And, you know, if you use that, you can get recommended to an agent or lender who actually knows what they're doing. And that will help you avoid getting screwed by somebody who just doesn't know how to use the product, but still wants your commission. And in the off chance that an agent or lender actually did give you bad gouge, please reach out to us and let us know so we can pull them off that list and replace them with somebody more educated. That said, in 7 years, we haven't had to pull a single agent or lender off of our list because we do a good job of making sure that these people actually know what they're doing before they start working with you. All right, guys, if you're not already, please, comment down below if you got something out of this. Make sure you subscribe to the channel. Our goal is to help 10,000 service members and vets achieve financial freedom by 2033, and I want you to be one of them.